Today we are going to talk about Boohoo stock, as it did have a very ugly day yesterday after the trading update. So we're going to take a look at it and my thoughts on the drop on Boohoo. Now, thank you yesterday for posting that you wanted to see a Boohoo video. Quite often I'll say, do you want to see this video? And a few people might say a few things, but yeah, the comment section was pretty much filled with people going, yep, we want to see a Boohoo video. So today I'm going to give you that, and yeah, it is a bit of a crash on the stock price, and yes, it is a crash. This isn't a stock market where it drops 2% and everyone panics. This is a stock that has just lost a huge amount of its market cap, its value of its company, and it is down 40% since the 12th of February. So this is a massive loss of value in the company. This is a crash, and this is what can happen sometimes with the stock market, with individual stocks. You have to be careful, because this, out of nowhere, you think everything's fine, boom, we lose a lot of value. And today we're going to take a look at that. First of all, before we go through everything here and some of the earnings, I'm just going to take a look at the stock chart and just talk about that for a second. So going on to the stock, you can see it's £2.13 today. It is down 1% or 1.7% today. It looks like it is trying to put a little bit of a recovery in, but every time it does, it just pulls back a little bit. So we'll see where it goes from here. I am going to say that it is worth pointing out that you never know what could happen here with when you have like a negative report from this like this point of view. You could see this actually downtrend for a couple of weeks after the report, so just bear that in mind. But at the same time, I am kind of looking at this stock now thinking that it has sold off so much before this big drop off on earnings that I'm like, I don't know if it could actually go that much lower. But you know, it's all short term, but I'm just going to put it out there that it does have the potential to happen. But let's just go from a 5-year perspective on the chart. So if we look here, it's a 2.6 billion market cap company now. Before yesterday it was actually 3.2 billion, so it has had a lot wiped off. A P ratio of 29, so 29, I'm instantly thinking 29 is, when we get onto the growth side of it, 29 for this sort of growth is very cheap. Like, I think Greggs that puts in 10% revenue growth is like a 35. So Boohoo, who puts in like a 30% normally every year revenue growth at 29, you're thinking, okay, that seems a little bit cheap. And if we go here, you can see the 52 high was £3.79, and obviously it's £2.12. So we see we are massively off the highs. And if we could go from here, where about the high was in February time, actually let me just zoom in a little bit more to make it easier. If we go here, boom, 43% down since February 2021. So we have been downtrending naturally through 2021. Realistically, was there any kind of information why that was happening? Not really. There wasn't too much negativity towards Boohoo. So to see it lose 28% before it was a little bit weird. Recently, I think this little drop here, which is probably half of it, was because ASOS came out with weak guidance, and you'll see what has happened recently as well is because Boohoo actually brought out these earnings and they were taken negatively. If you're a Boohoo shareholder, or if you track ASOS, if you're an ASOS shareholder or you track ASOS, you would have seen that their price took a hit as well because of Boohoo. And Boohoo, the other way around as well, is when ASOS did their trading update, it went down. And then boom, we have another massive drop yesterday. And the drop yesterday was huge. Like, even though it was like a 15% drop, they ended up closing at, there was actually points where it was down even more than that yesterday. So yeah, it's been a bit of an ugly kind of year for Boohoo stock. Obviously, even before the earnings update, it was a stock that kind of, wasn't performing that well. And if we just go back from here now, we're only really up from the worst kind of day on the CV, the peak CV when it was like end of the world stuff. We're only up 18% since then, which is nuts. And when we look at what the company's done over the last year or year and a half, you're looking at that one thinking that was peak negative, that was peak fear. Like, everyone's like, oh my goodness, there's actually a pandemic going on. And yeah, we're only up 18%, which is kind of crazy. And same as if we track it all the way back, you can see if we go, we have to go back all the way here to kind of get back to the point where it last was, around about the same value, which was the 28th of June 2019. So yeah, Boohoo is literally back to prices it was at like 2 years ago. We've had 2 years kind of wiped off at the moment of this valuation. Now, the history of Boohoo with me, if you've been tracking the channel, you might know, but sometimes there's some new viewers that come on. Personally for me, I did hold some shares going into this earnings. I've held some shares for quite a while, and basically my first ever purchase of Boohoo was around about here in the CV dip. But over a course of like a month, 2 months, you can see the stock absolutely bounced like crazy, and I actually sold completely out of Boohoo at that time. and I made a good amount of money. I think I made about 80%. And the next thing I know, the stock goes down a huge amount, and then I end up buying again in July time. The stock then bounced up again, and I thought, you know what, this time I'm going to hold some shares for the longer term. I did sell a little bit of the money, the stock though, made some good money, and then it fell off a cliff again. And once again, I bought the stock again, and it went up again, and I trimmed again, and we're kind of going back on another dip again. So yeah, I am kind of, from this point here is when I came like a long-term shareholder in Boohoo. But I have taken 2 little trims on the way, which made me some good money. So even though I'm kind of playing this as a long-term hold, there is a lot of volatility, there's a lot of movement, and I am someone that, even though I'm holding it for the long term, if I do have these little spikes in Boohoo, I do sometimes trim a bit of position and do make a little bit of good money from it. So that's kind of my history with Boohoo, and also some action on the stock chart at the moment. Now, at the moment, Boohoo is trading at a 30p ratio. It's trading at a forward P ratio of 22. Now, for a company that grows around 20 to 30% revenue rate, I normally like picking up a company with that sort of profit and growth around about a forward P of 18 to 22, 23. So at the moment, this is completely in my target range, which is absolutely amazing. It's trading at a 1.1 price to sales ratio as well, which is very cheap. And just to kind of put that into like a comparison, one company that I used to own that's a bit similar to Boohoo is Revolve. So some of you guys might know this company. It's a company I invested in, I believe, a year and a half ago now, and made over 100% on it. Very good stock for me. And Revolve is very similar. It's kind of in the fashion, but it's not as like fast fashion as Boohoo. But they make a bit more profit on the products they do sell, a little bit more higher end. But it's the same sort of profitable company that has 20-30% revenue growth. And Revolve is currently at a 51p ratio. And like I said, Boohoo is currently at a 30. So just comparing it to Revolve, which has the same sort of growth, you can see like the P ratio difference between these two. Forward P of 51, forward P of 22. So massive difference again. And on the price to sales ratio, it's a 6 and Boohoo's a 1. So just to compare that to a very similar stock, which I think is another really good company but grows about the same as Boohoo, you can see the valuation difference here just between these two companies. Now, like I said, the drop off was with earnings, and we're going to go through them earnings in a second. But overall, you kind of know now my history with the stock, if you're kind of new to the channel, that I am been a shareholder in this company for a good kind of 12 months period. So earnings, I'm not going to go through that. Normally when I do these earnings report, I normally like get the earnings on screen, but sometimes I feel like that can be a bit boring, like me just talking to you and reading things at you. So I thought I'll do this whiteboard style, and hopefully I can kind of cover the main points. If you haven't read the earnings report, please do read the earnings report. If you've not listened to the conference call either, it's about an hour long. There's some really good information on there as well. So I'd recommend, if you're driving about, just put that on in the background if you are a Boohoo shareholder, or if you are looking to get into the company. There was some very good information on there. Now, overall, earnings, in my opinion, the revenue was very strong. Over a 2-year change, we had 73% sales, and that was a 20% over the last period. So overall, obviously the sales were a little bit slower, but we knew that was going to happen. Best to compare it over a 2-year period, 73% sales growth over the last 2 years. Absolutely fantastic. Now, the reason why sales were a little bit smaller is because what did you have last year to compare to? Everybody was at home. Everybody was at home, shops were closed, everyone went, oh, I'm a bit bored, I want to order something. And what did they do? Everyone kind of stopped going to a lot of high street stores. Boohoo gained a lot of new customers, everybody was ordering online. So the first half of last year was very good for Boohoo. So they had very hard comparisons to beat, and also you kind of pull a lot of that demand forward. So it's hard to it's one of those stocks that kind of has had a bit of demand pull forward, but still put in very good growth. Now the thing is here is that it grew at 73%. And 20% is still good. It's not a company that's like stagnating, it's still growing, but it's just got very hard comparisons to beat. But you look at that, 73% change over 2 years is fantastic. And the thing is, as well, is like we said, when you look at the share price, this share price, when you go back to 2 years ago, is the same value. So you basically, at the moment, the company is the same value as it was 2 years ago. And in that time, over a 2-year period, it's grown sales at 73%, which is absolutely amazing. And 20%, yeah, it's a little bit slower, but like I said, it's got hard comparisons to beat. This time round, everyone's not at home wanting to order clothes. And the thing is, as well, is like, the next kind of period, Boohoo have already come out and said like, oh, we're updating our guidance. We do expect it to be a bit stronger than this going forward, as the comparisons aren't as hard to beat. So this isn't kind of a sale problem. It's just a hard comparison to beat. And like in the next second part of the year, the comparisons isn't as hard because the high street opened back up. People realised, oh, I don't need to buy any more clothes because there's not that much to do. Whereas this time round, it's the same again. Everyone can still go to the high street, but the world is opening back up again. So sales will, it's just hard comparisons to beat. So there's not a sales problem here, in my opinion. It's one of those that you're better off going over a 2-year period. We look at a 2-year period. This company normally grows 30% historically. So if you said over a 2-year period, we would have grown 30% years. That's still about right. So that's very good. Earnings, well, the big thing was the profit. Profit was the thing that kind of brought the share price down on earnings. And when I saw their earnings, I thought, okay, sales are good, but I looked at the profit side of it and I thought, I don't know how the market's going to take that, because I thought the stock's already sold off. But when you start lowering profit, that normally automatically creates a little bit of fear. You've seen it quite often with a few companies. ASOS has done it recently. You look at Best of the Best. They kind of said, profit's going to go down a little bit. And with a lot of UK stocks, if there's a little dent in the profit, they react big time off it. And I thought when I saw it, we'll see what opens up. And then I thought, it might go down like 5% or something. And then I looked and it was like down at the open, it was down something like 18% or something crazy. So yeah, it was a big reaction off the profit side of it. But the profit was down for a few reasons. First of all, investments. They have made a lot of investments this year. 2020 was a very good year. 2021 for Boohoo seems a bit more of a year just to kind of reposition themselves for life after the CV. So one of the big investments that they made recently, obviously you guys probably know, was Debenhams. I thought this was an absolute steal of a purchase. They got it for dirt cheap. You're getting a great online brand here. That brand opens you from Boohoo being the normal kind of 16 to 24 age range now to 16 to 50 plus age range. So I think that was a great purchase. And as well as that, they expand from just being a clothing brand into a beauty brand as well, which I think is a really good thing. And the thing is a lot of this investments they made into Debenhams hasn't really got shown in the financials yet. It's something that we'll see more built up into 2022. So yeah, they've made a lot of investments from buying a lot of brands that have suffered, but will help the Boohoo brand in the next kind of couple of years. So that kind of hurt them a little bit, but I think it's I think this was this 2021 for Boohoo is a bit more of a building year for going on. 2020 they delivered. You cannot say Boohoo had a bad 2020. 2021, same again, it's still pretty good, but it's kind of now rebuilding for 2022, and 2022 looks really good as well for this company. In the investment side of it, they did invest in a lot more warehouses. They did invest into a lot of distribution as well, which is good. And that's what you want to see as a company, is them improving them to make better margins, to improve so they have capacity for better sales, and also the logistics time of getting parcels to customers as well. So I like a company that does invest to keep the company growing, rather than a company that kind of stagnates and goes, we're happy where we are, we just want the profit to go up. I would rather a company burn through the profit a little bit if that means that their revenue and profit will be rewarded in the long term. And that happened a lot. There was a lot of warehouse investment, a lot of distribution investment. Leicester factory. So obviously we know the Leicester situation is probably the root cause of why the share price of Boohoo hasn't really done much in the last 2 years. Because like I said, if you look at Boohoo in the last 2 years, the share price hasn't done anything. If you go from 2 years ago, the share price is the same. You look at Boohoo as a company, you look at the fundamentals of the company, they've just got better. 100%. You cannot tell me that Boohoo has performed badly fundamentally in the last 2 years, because we're talking about a company that has grown 73% sales growth. We've talked about a company that's making more profit. We have a company that's grown, I think the US side of it has grown 120%. The market share has doubled. They've bought some great brands. They've paid off all the debt. The company fundamentally over the last 2 years has performed absolutely amazing. The share price hasn't. And what is the cause for that? Because it's not the company is delivering 100%. It's probably the Leicester factory situation. And once again, there've been a lot of investments made to avoid any of that happening, because we know what happens is the media will drag Leicester into these factory situations, which isn't Boohoo's fault because they are third-party suppliers. Yes, sure, maybe they could manage it a bit better, which they are trying to do now, and make sure that they are not involved in any of this. But yeah, that's probably the reason why. And a lot of investments at the moment is to avoid any of that Leicester factory situation happening again. So Brian Levison has come in. He's obviously done the factory list, working with a lot of the suppliers, and also they're building the model factory in Leicester as well. So they are trying their hardest to kind of stop getting tied in with that Leicester situation. That's probably what the root cause of why the share price is down. And like I say, if you consider now, imagine Boohoo never gets tied with that ever again. You've got to think, well, the share price has to go in the right direction, because the company at the moment, like I said, in my opinion, is looking quite cheap from a lot of other metrics. Now, probably the biggest burner in the earnings report, and what was one of the big hits on the profit side of it, and why the share price probably went down off this earnings, was this here. 26 million increased shipping costs. So we know there's a lot of logistic problems out there at the moment. We know there's a lot of shipping increases out there, and it hurt Boohoo. And I think this is a bit of a warning of what we could see in the next earnings from a lot of companies. Shipping is going to hurt a lot of companies. Boohoo, 26 million increase on shipping. Now, when you're a company that makes 100 million, I believe Boohoo makes, when you take a 26 million hit, it's going to sting the financials a lot. So yeah, 26 million was a massive hit on the shipping costs. And if you go on the earnings call, they did address it. They said basically this is something that we believe is short term. We do believe that probably by the end of the year, this will level itself out. We'll see what happens. I'm not an expert in what's going on in the shipping and logistics world right now, but I do believe that costs are inflated, and that will kind of calm down a little bit as the year goes on. You could argue that maybe some of these costs are here to stay, but if, let's say, it just even halves, I'm sure what Boohoo will do is just kind of, just squeeze them prices up a little bit on the products, and that will level it out. So either way, it either goes down, or Boohoo will pass that on to the customers, and that will be sorted. So I think that was just a short-term hit, so I'm not really worried about that, and that was one of the biggest hits on the earnings side of it. And also the weak summer period. So Boohoo pretty much came out to say that we did have a bit of a weak summer, especially in June, because what happened is you had the Freedom Day moved from June to July. You didn't have as many festivals and people going on holiday, so our summer season was a little bit weaker than normal, which is what ASOS said. So fair enough to ASOS, they did call it out, and what they have started to see is it's starting to recover now. So yeah, to say that these sales were down or around about the 20% rate, if they had a bit of a better summer, we could have seen a really good beat on the revenue side of it as well. So hopefully that's one of the last kind of CV problems kind of affecting the company, which has really helped it over the last few years, I guess, as well. Now, there was some hidden gems. There were some hidden gems that I tried to pick out when I was listening to the earnings call. And like I said, that was the second half of the year starting to rebound. They kind of guided from 20% to 20 to 30% revenue growth. They basically said that we have started off strong, and the big thing that you got to consider for Boohoo this year is you have a Halloween period, which we didn't have last year. Obviously, people were going to parties, getting dressed up. As well as a Halloween period, what you have is you'll have a Christmas period. When you consider the Christmas period, what do you have? Well, people will either go shopping and buy each other clothes, but as well, people will go out a lot more. You will go see family. You'll have Christmas dues. Obviously, none of that really existed last year. I mean, it should have done. We basically got told if you lock yourself up for 3 months, you can have a normal Christmas. Go around to Christmas, what was it, like 2 weeks before Christmas? And then our lovely Prime Minister went, no, forget it, you're not going on Christmas. Lock yourself up, we might have a normal Easter. And we knew how that one ended up as well. So enough politics for today. But yeah, Halloween could be coming back. We should have a strong Christmas sale, which we didn't have last year. So the second half of the year could be very strong. Infrastructure, like we talked earlier, warehouses, distribution, they have now put that in place so they could do 4 billion in sales. So yeah, we are seeing Boohoo. We know where they're looking to go. 4 billion of sales to support. So we could see that start creeping in the next few years. If Boohoo start hitting the 4 billion sales, that'll be very impressive. So yeah, they have, like I said, this is a bit of a year of Boohoo going, look, we had a good 2020. 2021 is still very solid, but we're kind of now preparing for life after the CV and getting our new brands, because we've gone from 5 brands to, I think it's 14 brands now, I guess, with the Debenhams one. We've gone to 14 brands now. We need to put everything in place to manage all that. And that's Boohoo going, look, we are targeting 4 billion sales in the next few years, which is great. One thing that I was pretty impressed about is a pretty little thing marketplace. They're going to create a Pretty Little Thing marketplace where people can go on and resell their clothing that they used. I thought that was a really good idea. Obviously, you're kind of going down the lines of, you know, like a Depop or Etsy there. I think at the moment they're kind of leaving it to sell like Boohoo and Pretty Little Thing products only, but it'd be really cool if they kind of, you know, expand past that. And I think as well is if you use a Pretty Little Thing marketplace, you've already got a good brand in there and people that use it. So I thought that was a really cool thing. That's coming out in 2022, so that's something to keep an eye on. And the other thing, suppliers outside of the UK, so this kind of actually came out pre-earnings, which is that they have now got a supply list for outside of the UK. So it does seem like this Leicester factory situation are they considering now moving everything out of the UK? In my opinion, that would be a very good move. I think the more that we kind of get production out of the UK, in my opinion, that would be a very good move for Boohoo, because we have seen what problems that does cause. Even though every other clothes company is guilty of it, it seems like when it's out of sight and outside of the UK, the UK press just turn a blind eye to it. So make of it what you want. I know it's just stupid, but hey, I think that is obviously one of the problems with Boohoo at the moment, and if they move that supply in outside of the UK, obviously that would stop a few problems as well. So yeah, overall my thoughts with it is that Boohoo now is at very cheap prices. Obviously massive loss. We're down at, you know, CV prices pre-CV 2 years ago. Valuation very cheap. Like I said, you know, a company at a 20p ratio is a company that grows 3 or 4%. This is growing, you know, nearly 10 times that at 30%. So very cheap forward P ratio. I mean, next year we're going to be talking about a company at 22 forward P ratio, which is just absolutely bonkers. Compared to Revolve, it's cheap. Drop off of earnings, yeah, I mean, I can see why it happened. You know, if you lose a lot of profit like what Boohoo did, then it is going to drop off a little bit. But once again, it's one of those that you got to look at. Well, they're making very good investments for the future, and if you believe the shipping costs are here to stay, then maybe you probably think, well, it deserves to drop and I won't buy it because that's the problem that's going to stay all the time. My opinion, it's a short-term thing. And from my point of view, there's still a lot of good gems in there, you know, building for the future. The second half of the year should be really strong, and there's a few good things coming down the line. So yeah, overall, even though it has been a bit of a drop in the share price, I still thought the earnings weren't too bad. You take away some of the short-term things, in my opinion, I think the company is still in a very sound position. So yeah, I mean, Boohoo was, you know, obviously Greggs was my biggest position, and it was Boohoo, and then it was S4 Capital. But I am looking at Boohoo now with this kind of drop-off, and thinking, you know, I always thought I won't make it my biggest position again, but I'm looking at it now and I look and think it could happen. So yeah, we'll see what happens. If you do want to know if I'm buying or selling the companies, make sure you join the Patreon. I will do a recap on Sunday though, with what I did buy, if you are happy to wait to then. But yeah, I'll leave you guessing if I did buy or if I didn't buy until Sunday. But yeah, hope the video is useful on Boohoo anyway. And yeah, in my opinion, I do think it is a little bit of a cheap company at these sort of values at the moment. So yeah, hope the video is useful. Hit the like button, subscribe. I'll see you on the next one.